What's going on again, y'all? It's Jay here, the NASDAQ Nurse, back with another video. Real quick, I'm at my patient's house on my lunch break, so I'm gonna make this real quick. So what I'm gonna be going over today is basically, if you don't understand the dollar index, you don't really understand Forex trading, right? So I'm gonna show you just a real quick tip and trick that helps me out, that helps skyrocket my win rate immensely. And once I kind of explain to you like what I'm looking at and why I'm looking at it and how it correlates with all of the different pairs and commodities, once you guys apply it, I think it's going to help you out a lot, right? So the first thing we do before we start looking for our daily bias, before we start picking out our pairs that we're going to trade for the day, what I like to do is I like to check the strength of the US dollar. The strength of the US dollar. So an easy way that you could do that is if you go into TradingView and the ticker symbol is DXY, right? So if you type in DXY, this will give you basically the dollar index, right? So it'll tell you if it's going to be bullish or bearish, right? So before we start trading any pairs today, we want to check the overall trend of the dollar to see if it's bullish or bearish for the day or week or whatever your time frame of trading is. Mine, I'm an intraday trader, so I go off the 4-hour to get my direction for that, right? So basically, step one's done. You just want to look at the dollar index on whatever time frame that makes sense to you and see if the dollar is going to be bullish or bearish for the time period, okay? Once you've determined whether it's bullish or bearish, this is kind of how I tie everything in together, okay? So as you can see on the screen here, if the dollar index is bullish, okay, then any pair that pits the United States dollar against something else, another currency, should be considered bullish, right? That makes sense because if the dollar strength is high, if we're pitting the United States dollar against another currency, we could expect that longs on that are probably going to be valid, okay? So you want to use this in addition to your daily bias to kind of see if you're in the right side of the market or not, okay? While at the same time, if the dollar index is bullish, any other currency against the USD should be bearish. Should be bearish, right? Because if the United States dollar strength is going down, then chances are the other currency that it's pitted against is going to either have static strength or more relative strength that would drive the price down, like Euro USD, okay? So that's if the dollar index is bullish. Now we're going to flip it. Same thing, equal opposite. If the dollar index is bearish, okay, so if the strength of the dollar is down, then any pair beginning with the United States dollar versus anything else is going to be bearish because you have a weakening currency versus another currency. Most of the time, the other currency is, like I said, going to have static strength or a little bit relative higher strength. So these pairs, shorts, would be more valid, okay? While any commodity or currency pitted against the US pair should be bullish, right? Again, it makes sense. If the strength of the United States dollar is down, then if you pit it against something, another currency, or even gold, right? Because what is gold? XAU USD, so gold versus the dollar. In these times, whenever you see the dollar index is bearish, anything competing against the US dollar in those pairs, you should expect to be bullish, okay? Now, hopefully that makes sense for y'all. But I'm just going to show you real quick a couple of examples, right? So we have the dollar index, okay? We have the dollar index. When I got into the market, I checked it out, and I see that we were forming green for the day, right? So my bias on the strength of the United States dollar is bullish, okay? So when I went to go take a trade on Euro USD, again, I want you guys to just take a quick look at the price action. Okay, so we are bullish on the day for the dollar index. Now going over to Euro USD, again, because we have a currency versus a strong, we have the euro against a strong US dollar, we could expect for this pair to short, okay? Which, you know, I took a trade on that. I'll probably go over a trade recap. But I knew that it was high probability because of my daily bias on the pair and because of the strength of the dollar. I knew that if the dollar was going to rise, then the euro versus the dollar was probably going to go short, okay? So just look at those two things of price action. Bullish dollar index, and then a pair versus the USD is going to go down, okay? One more time, because like I said in the other example, right, we said that if it's bullish, anything versus the USD would be bearish, which we just showed in the Euro USD example. Now, at the same time with the dollar index being bullish, I'm looking for USD versus any other currency pair to be bullish, right? So again, we're going to take a look at this price action. We were bullish on the dollar index, and then what was another one that I caught? USD CHF. USD. It's, you know, it's the United States dollar, which is showing relative strength, right? You know, we've already determined that it's bullish versus another currency. So because we have a strong US dollar versus another currency, we would expect it to be bullish along with the dollar index, okay? Now, when I first learned this concept, it took me a minute, so go back and watch the video, drop a comment, subscribe. Please, guys, ask questions, because once you get, I mean, this is just a little tidbit. You might have not even heard of the dollar index before, but once you combine this with your daily bias and the strategy that I'm teaching you guys on this channel, your win rate will skyrocket. So again, this is Jay, the NASDAQ Nurse. Please hit me up, you guys, with any questions, comments, or concerns, and I will see you guys shortly in the next video.